The year was 2016, a year that would mark a significant turning point in global politics and economics. A wave of populism swept across the United States, capturing the hearts and minds of many citizens. This movement carried Donald Trump to the presidency on a bold promise to make America great again, a slogan that resonated deeply with his supporters. This resonated with many Americans who felt left behind by globalization and anxious about their economic future. They were yearning for change and a revival of American industry. Trump promised to bring back jobs, renegotiate trade deals, and challenge China's economic dominance. His vision was to restore American manufacturing and protect domestic industries. Meanwhile, across the Pacific, China was experiencing an economic boom, transforming its cities and lifting millions out of poverty. It had become the world's second-largest economy and was rapidly expanding its global influence, positioning itself as a formidable competitor on the world stage. Chinese companies were investing heavily in infrastructure, technology, and innovation, driving the nation towards a future of unprecedented growth and development. China's President Xi Jinping spoke of a Chinese dream, a vision of national rejuvenation and global leadership. This dream was about reclaiming China's historical prominence and leading the world in various sectors. The stage was set for a clash of economic titans, each vying for supremacy in a rapidly changing world. The United States, the established superpower, felt threatened by China's rapid ascent. The American leadership was determined to maintain its global dominance. China, the rising power, was determined to claim its place on the world stage, showcasing its advancements in technology and military might. This rivalry would have profound implications for the global economy, influencing trade, investment, and international relations for years to come. The United States and China represented two very different economic models, each with its own strengths and weaknesses. The United States championed free markets and individual liberty, fostering an environment of innovation and entrepreneurship. China, under its Communist Party leadership, pursued a state capitalist model with a focus on central planning and national champions, aiming for coordinated and sustained growth. The coming years would test which model was better equipped to thrive in the 21st century, as both nations navigated the complexities of a globalized world. The United States economy was characterized by innovation, driven by its tech startups and cutting-edge research and development labs. The country was a hub for groundbreaking technology and innovative products that shaped the global market. A strong consumer market that thrived on the purchasing power of its citizens, and a powerful financial sector that was the backbone of its economic strength. However, it also faced significant challenges such as income inequality, a shrinking middle class struggling to maintain its standard of living, and a growing trade deficit with China that highlighted the complexities of global trade. China's economy was booming, fueled by its vast manufacturing capabilities and robust export activities, and significant government investment. It had become the world's factory, producing goods at an unprecedented scale and cost. However, China also faced challenges such as severe environmental degradation, overcapacity in certain industries leading to inefficiencies, and a heavy reliance on foreign technology for its advanced manufacturing processes. Trump viewed China's economic rise with suspicion. He accused China of engaging in unfair trade practices, currency manipulation, and intellectual property theft. He believed that China was playing by a different set of rules, and that the United States needed to take a tougher stance to protect its own economic interests. In 2018, Trump launched a trade war with China, imposing tariffs on billions of dollars worth of Chinese goods. China retaliated with tariffs of its own, marking a significant escalation in economic tensions between the two countries. This trade war had far-reaching implications for global trade and economic relations. The trade war had a ripple effect across the global economy, affecting various sectors and industries worldwide. Businesses on both sides of the Pacific felt the pain, with many struggling to adapt to the new economic landscape. American farmers lost markets for their soybeans and other agricultural products, leading to significant financial losses and uncertainty about the future. Chinese manufacturers faced higher costs for imported components, which squeezed their profit margins and disrupted their production schedules. The tariffs disrupted global supply chains, causing delays and increasing costs for businesses around the world. Companies had to scramble to adjust their sourcing and production plans, often at great expense and with considerable effort. Some companies moved their manufacturing out of China to avoid the tariffs, seeking more stable environments for their operations. This led to concerns about a decoupling of the United States and Chinese economies, which could have long-term implications for global trade. The trade war also had a negative impact on global growth, with many countries experiencing slower economic activity and reduced consumer spending. The International Monetary Fund, or IMF, warned that the tariffs were hurting business confidence and investment, leading to a more cautious economic outlook. The IMF downgraded its global growth forecasts, citing the trade war as a key risk factor that could derail economic progress. Despite the economic pain, neither side was willing to back down, leading to a prolonged standoff with no clear resolution in sight. Trump believed that the United States was in a strong position to negotiate a better deal with China, aiming to address long-standing trade imbalances. China, on the other hand, was determined to stand its ground and not be seen as bowing to United States pressure, emphasizing its own economic resilience and strategic interests. China's resilience, weathering the storm. China responded to the trade war with a mix of defiance and pragmatism. It implemented its own tariffs on U.S. goods. It also sought to reduce its reliance on the U.S. by strengthening ties with other trading partners. China's government also took steps to stimulate domestic demand and support its economy. It increased infrastructure spending, cut taxes, and provided subsidies to key industries. These measures helped to cushion the blow of the trade war. China's vast domestic market proved to be a source of resilience. With a population of over 1.4 billion people, China had a large and growing consumer base. This provided a buffer against the decline in exports to the U.S. The rise of the digital dragon. Even as it grappled with the trade war, China continued to make significant strides in technology and innovation. It invested heavily in research and development, aiming to become a global leader in artificial intelligence, quantum computing, and other cutting-edge fields. China's tech giants such as Alibaba, Tencent, and Huawei emerged as global players in the tech industry. These companies developed innovative products and services that rivaled those of their American counterparts. China also made significant progress in developing its own digital currency. The digital yuan, as it was known, had the potential to challenge the dominance of the US dollar in global finance and trade. A new world order? The trade war and China's technological advancements raised profound questions about the future of the global economy. Was the world headed towards a bipolar system, with the US and China as the two dominant poles? Or could a new, more multipolar order emerge? Some argued that the US and China were locked in a new Cold War. They pointed to the growing rivalry between the two countries in areas such as trade, technology, and geopolitics. Others argued that the relationship between the US and China was more complex than a simple binary. They pointed to areas of cooperation between the two countries, such as climate change and global health. The future of the global economy remained uncertain. However, one thing was clear. China's rise as a global power was reshaping the world order. The road ahead, collaboration or conflict? The US-China relationship is the defining geopolitical challenge of the 21st century. The two countries have a shared responsibility to manage their rivalry responsibly and find ways to cooperate on global challenges. A full-blown conflict between the US and China would be disastrous for both countries and the world. It is essential that both sides engage in dialogue, build trust, and find common ground. The world is watching closely as the US and China navigate their complex relationship. The choices they make in the years to come will have profound consequences for the global economy and the future of humanity. The future is not predetermined. It is up to us to shape it. We can choose a path of cooperation and shared prosperity, or we can choose a path of conflict and decline. The stakes could not be higher.